Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week of FOMC week, in which we had not a lot of economic information, but the big day on Wednesday, we got what we were waiting for. Jerome Powell confirmed that there will be cut rates this year, and the economic projections showed, the dot plot showed that there will be around 3 rate cuts this year. That was exactly what markets were expecting. That's why we rally big time. But we have to pay attention to those nuances, and sometimes what did not happen, it's more important of the actual market doing things. So what happened sometimes is less important of that rather than the what did not happen. And we are going to see what did not happen. In the Nasdaq, what did not happen is that we didn't hold all-time highs. But at the same time, we pull back a bit, we are holding more or less, so we should be cautious still and waiting for more information and structure. But the S&P, it's actually holding around the all-time highs, and it's pretty much more bullish than the Nasdaq. This divergence, it's really tricky to trade. Even though we are at all-time highs, we have to be really careful, but there are quite different markets. We are going to analyze that in the technical analysis section, but first, let's quickly review what happened this week in terms of economics. On Monday, no news. On Tuesday, we got housing starts. Look at this, 10.7% on month over month for February. So housing markets is really hot. Building permits also showed the 1.9% month over month. This is a preliminary data, but I still think the building sector, the housing sector is pretty damn hot in terms of construction, new housing starts, new building permits. And because there's a lot of demand for houses, even though we are at all-time highs in terms of 30-year mortgage rates, and households are really struggling to find opportunities in with these high interest rates, the labor market is pretty much strong. So that's pretty good for the economy. On Wednesday, we have the big time FOMC interest rate decision. We held rates at 5.5%, and the economic projections showed in the dot plot that Fed's the FOMC is thinking about around 3 rate cuts of 25 basis points this year. And as you can see in the meeting probabilities, in the interest rates probabilities, we have a hold again for 525, 550 in the next meeting in May. In June, we are going to start cutting rates for the first time. In September, for the second time. And finally, in November, December, we are going to cut for the third time, ending the year at 450, 475. So 3 rate cuts, this is the path. We are aligned with the Fed, and I think that's good news, but we have to be really careful. On Thursday, initial jobless claims still show that the labor market is pretty much strong, and existing home sales, again, month over month, 9.5. The demand is pretty damn high. Friday, no news Friday, pretty difficult to trade in FOMC week when Friday has no news. And nothing important from bar nor Bostic. And I think the market tried to find bottom and finally did held a bit. That's why I think I'm quite optimistic, at least to wait and see. We have to be patient and react to what the market is telling to us. Let's now start with the technical analysis on the Nasdaq. This is the weekly chart on the Nasdaq. Pretty good week on the Nasdaq. It's 2.86% on the Nasdaq, and be careful with this double top at all-time highs. As I mentioned earlier, this is the S&P, so as you can see, big push, consolidation, and now we are pushing all-time highs, 2.13. So really different price action in terms of this was the breakout of the all-time highs, consolidation on the S&Ps, and then we are trying to go higher. We are now up here. We are holding this breakout, but on the daily chart on the Nasdaq, this is what really concerns me. This was the breakout, the failed breakout on the all-time highs, and we are hovering up here at the higher part of the range up here, and obviously we are leaving a gap behind in terms of the daily. So let's start by doing that. We have a daily fair value gap right now that we have to really watch and keep track of it on lower time frames also. So on the 4-hour, we can see the FOMC move, the gap that I was telling you, and the failed, in my eyes, this orange liquidity was the liquidity at all-time highs. We tried to push higher and we retraced, and Friday was quite choppy. So certainly with this structure, I'm still a little bit optimistic. The ES is way stronger. So we are at this fair value gap right now. We are slowly dragging down, and we can expect to continue higher depending on the economic, depending on the news, and depending on other markets. That's where I think we can find more information and our edge, our advantage to trade for next week. Let me continue with the Nasdaq in lower time frames, and then we can find correlations in the dollars, in the dollar and the yields, because I think those markets are telling us way more than we can find in the equities. 1-hour chart, we can see that we have right now in the pullback from the all-time highs, we have this inverse fair value gap, and we have this bullish fair value gap, and we are trading basically in the middle. We didn't take yet a decision if we are going to go lower or if we are going to consolidate here and start pushing this inverse with the strength of the S&Ps. We have this channel, and there's a couple of opportunities on this pullback. If we can meet, for example, some golden pockets, some pullbacks, there's certainly this fair value gap on the S&Ps. I think it's pretty much interesting to really move higher to look for opportunities for longs, but we have to wait. I don't see really a lot of structure to make a big decision. What is true is that we rejected the all-time highs on the NQ. We couldn't hold that, and let's see if we can find more correlations in the technical individual tech in the individual tech stocks or in other markets. This is pretty much the situation. We bounce on Friday off the free value gap, but we rejected also this inverse, as you can see. So I really need more structure. Monday open is going to be quite interesting, but trust me, we have to be patient. We have to react to what is going to happen. We have to wait and see what kind of structure we have, either option available for this week, even the chop. So be disciplined. That's the most important thing. In terms of individual tech stocks, we have the dailies. Apple, as you know, it's being sued by the Department of Justice due to monopoly on iPhones and all that kind of stuff. There's a lot of articles saying that it's quite surprising. But what is true is that on Thursday, Apple dropped 4%. And this is not normal for Apple. The last time Apple dropped even more than 2%, it's basically, tell you, 2.46 in October. So down here, we have this other day here. So this is not normal for Apple. We are at at the downside, at the down part of this channel. So if news continue pushing the stock lower, we may find opportunities down here, and if not, Apple will drag everything down. That's the most important thing to watch. Apple, it's being shorted, it's being pushed down pretty heavily due to fundamental news, but the rest of the market is it's quite strong. There's mixed sentiment on at these levels again at Microsoft all-time highs. We broke, we pulled back quite a lot, and then we are finding us again at 430 pretty much at all-time highs levels on Microsoft. Tesla, it's I have zero interest in Tesla right now. There's a lot of stocks that are way better positioned and way more interesting than Tesla. Tesla is pretty much berries. In my eyes, it's pretty berries. I would maybe think about something at around 150, 146 down here at the January 2023 gap. But let's just move on and continue with the other tech stocks that they are way more interesting. Amazon, look at this, push higher and then again inside the range. This is some kind of Wyckoff manipulation. We have to see if we reject again and continue lower, or we just higher and we are just chopping and trying to drag higher and grind higher. But again, look at this, it's not looking bad. Google, it's pretty much squeezing all the shorts. Google, it's fundamentally, it's being helped with the fact that Apple is thinking about the Gemini model, AI model for their devices. And it's pretty damn interesting right now, Google. NVIDIA, our queen of AI, it's just after this big sell-off, people are just continuously holding the stock. And Friday was, look at the 1 minute. I mean, Friday was pretty damn good, 3.12% for NVIDIA on Friday. And finally, Meta, it's holding also. So we push, pull back, we are structured, and we are trying to find again some kind of people to break all-time highs. So as you can see, the Nasdaq pulled back from all-time highs, rejected. We have some kind of structure being formed here, but there's a big divergence between Nasdaq below all-time highs and kind of being cautious about that level, and the S&P that is clearly, if we mark the previous all-time highs, we can see that it basically broke out on the FOMC day, and we are slowly dragging down. And this kind of pattern, this kind of structure usually follows up. What we can find to really at least watch other markets waiting for that reaction on the equities, the first thing that I always recommend is watch dollar. And the dollar is telling us something pretty different. That's why I'm quite concerned about equities market, the Nasdaq and the S&P's futures, because we have a pretty much trend to the upside that slowly dragged down. And when we finally pull back, we had this big candle and 1, 2, and 3 really bullish candles on the way up, squeezing all these people. So dollar is quite strong. It's looking quite bullish since the FOMC. Look at this trend. It's super bullish, and a bullish strong dollar is not good for the market, stock market. So be really careful. Dollar is right now at pivot after pivot, and it destroyed these shorts. So it's quite strong, and that's the most important thing you can have from this video, is that dollar, it's the stronger of the divergent assets from the equities. We have the US 10-year and the 2-year yields in the negative on Friday. If we check the daily on those, We can see the big rejection, the FOMC, due to probably not so higher interest rates, and they pull back a bit. So yields in the red are quite good. Actually, the treasuries are correlating with that, and we are coiling in this huge market. And I think this trend is going to push to the upside at some point, because market will get their interest rate cuts and treasuries will just boom. But dollar is way stronger than the other kind of assets. We have to think about that because that will affect the performance on the stocks. We should not have strong dollar and at the same time equities and stock market pushing all-time highs. That's quite weird. Dollar is a defensive asset. It's inverse correlated with the equities market, and that is the way it is. Small caps are also quite interesting because we have this ascending trend that finally got rejected. We pull back. We are now trying to find our spot in this higher low, maybe to find final push towards this big pivot from March 2022. As you can see, the big accumulation, the small caps in basically 2 years, it's now pushing higher with quite a lot of strength and higher lows. And we can certainly see small caps and the breadth increasing and improving in the upcoming years. And IWM being at 240, I mean, that's not crazy. That's actually what it looks like in my eyes. So this is what is fueling the overall strength on the S&Ps, larger than the NQ. But as I was saying, be careful with the dollar. Gold is also quite bullish and super volatile also. Look at this move. It's true that this kind of pattern into a breakout and a failed is quite concerning. But I think gold is being purchased by the central banks like crazy. It's a defensive asset also. So we have dollar pretty strong. We have gold pretty strong. And crude oil is pulling back. That's why I think people is no longer concerned about inflation. It's just basically the expectations of interest rates from the Fed, coupled with the fact that the forward PE ratios for the earnings on the tech stocks are still pretty damn optimistic. But another thing that is not looking good is look at all these bankers. Look at all these banks in the red. XLF, even though it's the trend is pretty damn good, the financial sector is pretty strong. Friday was quite concerning in that regard. So at the end of the day, we have to really wait and see. That's why I was telling you this is the structure I'm watching. This is basically my chart. And we have to, on the 30-minute and on the 15-minute, we are in the middle of two of my main structures that I think we have to wait and see what happens. If we start pushing this inverse, we might see some continuation from the FOMC move to the upside. But if we start seeing it slowly dragging down and taking out the last week low, that will be basically this pivot, and we start to drop lower, I mean, I will be watching these 18,450s for the golden pocket pullback, because in the higher time frames we can certainly continue pulling back slowly and then find some buyers and start calling up higher. This will be a proper pullback, and we have to wait and see. We have to be cautious, but at the same time, we have to pay attention to the price action. As always, it's really important. I think this next week is going to be quite technical, and the most important thing is going to be your patience, your disciplines, and when the opportunity presents itself, manage your risk, because it's going to be quite important. Let me just take a quick look for the week ahead in terms of what will be happening Monday. Basically, I don't know. No news Monday. That's only new home sales month over month. Let's see what happens. Durable goods and Case-Shiller home price. Again, more information from the home sectors. Wednesday, no news. And then we have Thursday with GDP and initial jobless claims, and Friday with the core PCE and personal income and spending. So a wait and see week on Monday, Tuesday, and Wednesday, and the final fireworks on Thursday and Friday. Be really patient. Trust me. Seriously, just wait and see. The price action will tell you what is going to happen. This is my chart. There's a divergence with the S&Ps at all-time highs, but I think both of them are in the possibility, in the range of continue pulling back a bit and then find buyers and some technical levels. And that's what I will be watching for next week. There will be a pretty technical week, I think, in my opinion, until the fundamental comes in on Thursday and Friday. So until then, just wait. Try to find some good levels, some structure, and follow the price action. Be patient and react to those levels. And that's all from my side. As always, this is the weekly recap. This is a video I try to do every weekend. And this is for you to really find my approach, to really understand what I saw in the market, to review with me the fundamental and the technicals, and try to position ourselves with a bias, an initial bias for next week, and my recommendation of levels, of kind of structure that I want to see, and most importantly, if there's other markets telling us something. That's what we did. That's the weekly recap. If you found these videos useful, thank you to watch them. Thank you to support the channel. Please give it a like and subscribe, because I upload videos like this every single week. And every day I also upload daily recaps, daily videos, daily analysis that you can also take advantage of. And I'm trying to provide you with a lot of content. And if you find this channel useful, just be with me, follow the channel, support the channel. And I will try to tell you exactly what I see, exactly my expectations. I have quite a lot of experience in these markets. I think we can learn a lot together. So, as always, patience, discipline, risk management are key in the markets, are key for your success in this trading career that everyone's trying to do and do well. But there's a lot of effort to be put. These videos and the daily analysis and the daily trading and the psychology behind that, that's really difficult. So if you are willing to put the effort, I'm here to help you and to try to understand some of the details that these markets provide to you and maybe you didn't recognize. So thank you for watching. Thank you for the support. Have a nice weekend, and let's put together a nice week next week, starting by tomorrow, Monday. So see you tomorrow. Take rest, enjoy the weekend, disconnect a bit, and tomorrow we can go back to the markets and let's see what happens. It's going to be a pretty interesting thing. So stay safe, everyone, and see you tomorrow.